Hey there, I just wanted to make a quick video. I've gotten a handful of questions on this, so I just thought I'd make a quick video that I could share with people, and then if they feel like they want to discuss further with me, we can obviously go into it further at that point if they feel like it's a good fit for them to consider. But I've been getting a handful of questions about charitable donations and 2025 and 2026 and how the One Big Beautiful Bill Act has changed things. And it definitely has changed things. And it does. If you are charitably minded or would like to make charitable donations in 2025 or 2026, I would consider watching this video because there are some big impacts on how it may or may not benefit you from a tax standpoint. So before we jump into that, though, I just want to throw out there that everyone's situation is different. This isn't tax or legal advice for anyone's specific situations. I'm going to share my screen here in a sec, walk you through how specifically this could potentially help you. But at the end of the day, right, the tax code is super complex and there's a whole bunch of hidden gotchas and things in the tax code. So like if you hear this from me or if you hear this from some influencer online or your friends doing it, they're telling you about some cool tax thing they're doing, like chances are in may, but also very well may not apply to you, right? And so word of caution with anything you're seeing online these days with the taxes code. But because again, your situation is different than most people's. So let's jump into it. I'm going to share my screen here. Before I do that, I'm going to share real quick what's changed in the tax code. So first thing is starting in these all changes start in 2026. The first things that I'm going to say is starting in 2026, if you are in the highest tax bracket, so you're in the 37% bracket. So most people this really doesn't apply to, but if you're in that bracket, then it does apply to you. Any charitable donations you make, instead of being applied at the 37% federal rate to lower your tax bill, they will be applied at the 35%. So essentially you're getting a 2% haircut on those charitable donations if you're in the 37% bracket. So that's the first thing starting in 2026. Second thing is if you normally itemize your deductions, and let's just get through a clear understanding of standard deductions versus itemized. So standard deduction is basically a free deduction that everyone gets after you add up your taxes. You get a free deduction from the federal government that will lower your tax bill, right? So for married filing jointly for 2025, it's $31,500. If you're a single filer, then it's half of that, right? And I think if you're head of household, it's 3/4 of that number, right? So you either take the standard deduction or you take the itemized deduction. Now, the itemized deduction is a combination of a handful of things, but primarily it's a combination of your state taxes owed. So that can be like real estate taxes, state income taxes. It could be potentially sales tax. It could be your interest paid on your primary residence or your mortgage, and then any charitable donations that you have. Combination of those things. Sometimes medical plays in and some other things, but primarily those three things add up to be a total of your itemized deduction. If your itemized deduction is greater than your standard deduction, you take your itemized deduction. If it's less, then you take the standard deduction. So that's typically how it works. If you're an itemizer, typically, the first 0.5% of your AGI doesn't count towards charitable donation. So let's just say you have a $200,000 of AGI. The first 0.5% of that, meaning the first $1,000 of charitable donations, don't count towards your itemizing or your charitable deductions. If your AGI or your adjusted gross income is $400,000, then the first $2,000, right? $600,000, then the first $6,000 of your charitable donations essentially don't count starting in 2026. So that's important. And then the other thing is there's a new below the line. So this doesn't count towards itemizing. If you itemize, it's kind of irrelevant, this thing, in starting in 2026. But if you take the standard deduction in 2026, then there's a new below the line charitable donation or deduction that you can take if you donate in cash to a charity for up to $2,000 if you're married filing jointly, or $1,000 if you're a single filer. So, how does that apply, or why? I'm actually gonna pull up a spreadsheet and share an example of someone that this could apply to and help and benefit, and we will go from there and talk about one update on the spreadsheet. Share it here. Okay, so we're just looking at two scenarios. Scenario one, you can see the state tax owed, your property taxes, your interest, and then charitable donations. So total of all those things adds up to be $40,000 right here, which is greater than your standard deduction for a married filing jointly. So you would take the itemized deduction. But you can see in 2026, if you just went through with the same exact numbers, you would get a little bit less. And I'm assuming in this, let's say $250,000 is your AGI, or adjusted gross income. Again, I'm just making all these numbers up. But for a scenario, and this is a very real scenario, I've talked to clients that are in similar scenarios to this, and also ones that are completely different scenarios than this. But this is a scenario that your AGI is $250,000, so your charitable donation would be limited. Your first $1,250 would not count charitable donations. So what does that mean? That means that your total itemized would be $38,750 instead of $40,000. So a combination of those two, equals $78,750. So I'm suggesting if you're in a situation where you regularly donate, or you're gonna itemize this year, you might want to consider making some extra charitable donations, especially if you're going to do them in 2026 anyway, maybe even into 2027. That could make sense for you as well if you have the liquidity to do so. And you can do this through a donor advised fund. There's options here where you don't have to just give it all to the charity up front. But so 2026, let's just say you take your state taxes and add them all up, and you basically prepay everything but that $2,000 that you can get as a new below the line deduction in 2025 as far as charitable is concerned. So you get a total of $53,000 itemized deduction. Then, as far as property taxes or as far as 2026 is concerned, you'll get your property tax, your mortgage interest, but I'm assuming in this scenario that you take advantage of what's called the pass-through entity tax payment. You can only take advantage of this if you are a pass-through entity, that like an S corporation or a partnership. Then you could take advantage of this. But I'm going to assume that you can for this scenario, and then I'll show you if you're not how it could impact that. But basically, what it is you could prepay your state taxes on your behalf, get a deduction for them on the state side, or on the federal side for federal tax purposes. Get a deduction for prepaying those state taxes on behalf of yourself from your entity. They don't really help you much on the state side, but they'd help you on the federal side. So we're going to assume that you can take advantage of that. So this is now irrelevant. You're just going to take the standard deduction because your total is your total itemized would be $16,500. And then you get the new below the line charitable deduction, right? So your total deductions add up to be $95,700 over the course of the 2 years instead of the $78,750. So it really does make a ton of sense to charitably donate this year. And right, the difference is that total of almost $17,000. Let's just assume you're at the 35% rate. That would save you about almost $6,000 in tax savings, right? Now, if this SALT payment is irrelevant for you, it's not. So let's just say you're a wage earner or your business isn't structured in that way. So it would your state tax payments would be up above. Your itemized would still be 25, so you'd still take the standard, but you'd still have a difference of $8,450. Which would save you an additional $2,900, right? So either way, if you're in a situation, and you'd have to run the numbers for your own situation, I'm happy to talk you through it if you want to. But at the end of the day, either way, it's going to have a big impact potentially if you're someone in this situation where you regularly donate to organizations or to churches or to whatever as part of a charitable donation. You can really get some good tax benefits by taking advantage of this this, I guess, old law while it's still in place in 2025, because the law is changing in 2026, and it's going to benefit some and hurt others, but at the end of the day, it is what it is. We have to live with it. And so taking advantage of it this year while you can obviously makes a lot of sense. So anyways, hope this helps. Feel free to reach out to me if you have any questions. And yeah, good luck. Have fun donating.